Welcome back. We have breaking economic news. New retail sales data has just landed in Canada. Those numbers are softer than expected in the month of October. Retail sales increasing in October by 0.6% from September. That's a monthly change from September to October. The value of total retail sales in Canada up by 0.6%. What was expected by analysts, 0.7%. Excluding automobiles, and we've seen this before, the monthly advance is very modest, 0.1%, much softer than the 0.4 expected by economists. So what growth there was in retail sales in the month of October was almost entirely driven, StatsCan is strongly signaling, by sales of automobiles. The September numbers have been revised. They are a little bit stronger than they were initially reported at. But the most recent figures are for October, and retail sales have come in at less than economists had expected. Another sign, perhaps, of a slowing Canadian economy. Now, some other stories that we're tracking for you here in the BNN Bloomberg newsroom. BlackBerry missed revenue expectations in its latest quarter and also issued a revenue forecast for the full year that came in below estimates. Overall sales fell 18% compared to the previous year. The company also saw a decline in its cybersecurity segment revenue. On the upside, sales in its Internet of Things unit came in above consensus and increased by 13%. Shares of FedEx are rallying in the pre-market, up now by nearly by 8%. This comes after the parcel delivery giant topped profit and revenue expectations in its latest quarter. FedEx also announced plans to spin off its huge freight division into a new publicly traded company. FedEx says that move will allow it to focus on fixing its core business as well as enhancing its competitive position. But shares of Nike, another high-profile U.S. stock, are down by more than 6%. The sportswear giant reported lower revenue in its latest quarter, also said revenue dropped in its footwear and apparel units. Also, sales in China, a key market for Nike, fell by more than 8%. The company says it expects revenue in the current quarter to decline in the low double digits and warns that an inventory shift will hit profit over the next 2 quarters. The company is in the midst of a turnaround plan. There are the U.S. futures. They are down. The declines have moderated somewhat as we get closer to 9:30 a.m. Eastern Time. We're now 58 minutes away from the open of trading in New York and Toronto. Well, we're going to talk about this stock right now. There is Celestica up 242% over the past 52 weeks. This comes on top of a remarkable gain in 2023 as well. A lot of investors are wondering if it's too late to get into the story of Celestica. Let's talk to an expert about it. He's an analyst who covers the stock. Robert Young is Managing Director and Head of Research at Canaccord Genuity and covers the stock. Thank you so much for coming in.
No, thank you very much for having me.
Celestica has recently reported results, correct? Tell us about these numbers, and is the momentum continuing at this company?
Yeah, I mean, the momentum has continued all the way through the year. I think the street views the guidance that the company has given as conservative. They have gotten themselves into a steady beat and raise cadence. The street is starting to take notice of the company's higher value elements, which are built around their own IP, what we would call an ODM offering, versus historically the company's been viewed as an EMS vendor, a company that manufactures stuff for other people.
Right. OEM is an original equipment manufacturer. That's what Celestica is becoming, is it?
Well, I would think there's EMS is manufacturing for other people. ODM is designing it, but letting other people put their brand name on it. This would be things like your laptop might be designed in China by a white box manufacturer, and then HP puts their brand on it.
Right.
And then an OEM would be a company like Apple who builds everything, designs and builds.
Right.
And I would say the Celestica is moving from the EMS into the ODM. So it's the middle stage. The margin structure and the value of the company and the valuation moves up commensurately.
The big customers for Celestica are the so-called hyperscalers, correct? They're the names that we're familiar with, building those giant data centers that get so much attention.
Correct. So the biggest that we know about would be Google and Meta. They're public. Amazon, we believe, is a competitor. And I think, sorry, not a competitor, is a customer as well. And then the company has said that they have business with the top 5 hyperscalers, which would necessarily include Microsoft and Apple, likely. The hyperscalers are the biggest buyers of technology hardware today. They're setting the standard for how data centers are built at scale. And so it puts a halo around what Celestica is doing because Google is turning to them to design their networking gear, which is customized to their specific application, including AI. And they're also using them to build AI servers. And I mean, arguably, you would say that Google would be at the very high end of the capability spectrum when it comes to developing, designing, and building these servers. So it puts Celestica in a really interesting spot. The hyperscalers, are a very large chunk of the revenue, potentially as much as 50%, and drive a lot of an outsized amount of their profitability as well.
Lauren.
Sure. We're reading a lot about Grok and AI, and can you give us some insight into, does that mean anything significantly to revenues next year or two, or where that is?
Yeah, I wouldn't focus so much on the revenue contribution because Grok is small, it's pre-revenue, but it's a sexy company. The core is the people that designed the TensorFlow chip at Google, which is the underpinning of their proprietary ASIC for all of the AI effort in their data center. The people that designed that have now moved and started their own company, which is Grok, and it's attracted an enormous amount of funding. And so, everyone is excited about the potential. And so they've got a lot of backlog. They've got a lot of people that want to use their product. I think Saudi Arabia is one of their, Saudi Aramco, rather, is one of their largest potential customers. And so, I think the bigger thing for Celestica is that we're seeing that they're going from building servers for Google, and now they're moving into companies like Grok, which potentially shows that they've got an ability to move deeper into the enterprise. Maybe the next is a large U.S. bank or a large retailer like Walmart or something like that that has, a very large internal data center. And normally, Celestica, they don't have a go-to-market function. So this Grok win suggests that they may be able to grow beyond the hyperscalers. And it's more that around what I said around that halo.
What's the company's posture on M&A, and how do you view M&A and Celestica?
Well, the valuation of Celestica has changed a lot in the last couple of years. And so it used to be that Celestica had a very hard time finding companies that would be accretive to their business because their multiple was so low. Now that their multiple is higher and they have a strong balance sheet, I mean, they've got 1 turn of leverage. They have cash. They've got liquidity of just a little bit over $1 billion. But certainly there's an opportunity to raise equity here if they wanted to at a much higher price in the market, much higher valuation. So I think that there's a much higher likelihood that they'll do a larger deal than the past. They haven't obviously said anything to the street or to investors about that, but it seems as though it's a logical thing for them to do. We'd love it if they would dig deeper into those pieces around hyperscaler to shore up the ODM business and show that as a long-term path for the company. But also, I mean, they have a subscale health technology business. They could, buy something to raise the margins on that business. They also have a very large aerospace and defense business. The world is remilitarizing. We're seeing, a lot of demand for airplanes. Everyone wants to be on an airplane these days. And so that aerospace and defense business is a good place for them to acquire, particularly if they can buy assets in the U.S. around space or ITAR facilities. There's a lot of opportunity for them. But the higher valuation is what really opens up the field for them.
Speaking of valuation, you've got a buy rating on this stock and a price target of $110 US dollars per share. What kind of metrics get you there?
Okay. So we look at this, we put a 20 times earnings multiple on this. And what we do, we look at the ODMs and we look at the EMS vendors. If you look recently, I like to look at the off-cycle reporting we get out of companies like Broadcom, Jabil, Micron. They've just reported in the last couple of weeks, and they've all had strong price performance off of reasonable results. Broadcom in particular is up 20% on the back of really strong results and a really bullish outlook on AI, which gives us confidence in the Celestica near term, because Broadcom and Celestica are very tightly coupled. And so a 20 times earning multiple compared to where the multiple on Celestica was 2 years ago seems very, very high. But the earnings growth, we're looking for over 20% earnings growth in 2026, which is what we base our target on. And so, I mean, that would give us a PEG ratio less than 1, which is, I think, very justifiable. So I think there's still room for this stock to continue to go. And there's clearly momentum. There's bulge bracket investment banks that are launching coverage. We've seen earnings going up over the last couple of months. And so it feels like there's a lot of momentum in the stock right now.